Hello and welcome back to Entrepreneur Money Stories. Today we're going to be talking about how to pay yourself as a sole proprietor or LLC. I have Kelsey back on the show. Kelsey, thank you so much for being here with me today.
Thank you. I feel like I always say I'm so excited, but I really am. As a listener, you may not realize how long it is between the episodes that we record. So it's been a while, and this is a question that we get asked all the time. So I'm really excited that we're finally getting to talk in depth about it on this episode.
Yeah, so we had came out with the S-Corp episode, so when to become an S-Corp and how to pay yourself as an S-Corp. We had such a good response from that episode, and somebody specifically commented on Instagram and asked us to do the same format of an episode, but for a sole proprietor or LLC. So this is thanks to your questions and comments. So just a reminder, if you have something that you would like us to touch on, you can, in any of our posts at Kickstart Accounting, you can make a comment, you can send us a DM at Kickstart Accounting, or you can send us an email at support@kickstartaccountinginc.com. We are here to be a resource for you. So this is a direct response. All right. Kelsey, I love to start at the beginning always before we dive into all the nitty gritty with lots of action. So let's just pause. What exactly is an LLC? And then we'll go from there.
Yes. So an LLC is a limited liability company. So it's basically an entity set up with the state that protects you as a member from any liability from the company when operated correctly. But it's important to note that it's not a limited liability corporation. It's a limited liability company. So not yet a corporation. That is a different entity type. So it is a legal protection. There's no accounting difference. So I know this is a question that we get asked a lot as well. There's no accounting difference between sole proprietor and LLC. It is merely just a legal one.
Yeah. I think it's really important, though. We get this question a lot from entrepreneurs. Should I, as a sole proprietor, become an LLC? And my answer is always absolutely yes. You should become an LLC. You should have that legal protection for you and your company. So if that is something that's been lingering in the back of your mind, yes, we do believe that you should become an LLC in your company.
That's right. My answer will always be yes. There are minimal costs associated with being an LLC. So this is also a question that we get asked. It varies by state because an LLC is set up with your specific state, and it can vary, but it's usually fairly low cost, usually like maybe $50 or $100 a year. A couple states it's higher, but for the most part, it's a very low cost option that has a lot of benefits.
So you have your I want to do this in layers. So you have your sole proprietor who really you're just operating your business under your social security number. So one day you decide you're going to start collecting income from customers. You're going to sell a product. You're going to start servicing, coaching. You decide that you're going to receive funds from other individuals. You are doing business as a sole proprietor. As an LLC, we are then doing a filing with your state, helping you with the legal protection. Now, I just want to be clear. We are not attorneys, and we will not actually do the filing for you. There are plenty of websites out there that do this. We do have a few guests lined up in the fall to come on and talk about this further. So the next level or layer of this is an LLC. And then from there, you can choose to be taxed as an S-Corp, which is the episode that we did. And I will link that in the show notes. If you didn't get a chance to hear that full episode, we'll make sure the S-Corp episode is linked in the show notes. So if you are at that next layer where you are consistently bringing in over $50,000 a year in net income, you and your tax accountant have decided to file that paperwork, you will move on to the next layer.
If you're filing with just a single member LLC, so just you're just going from sole proprietor and forming your LLC on your own, then you'll be taxed as a sole proprietor, or you can go up from there to be taxed as an S-Corp or a C-Corp, whatever it may be, but you don't have to. You can stay just an LLC and be taxed as a sole proprietor.
Now, we're going to continue on in this conversation with how to pay yourself as an LLC, but I want to be clear that this is as a single member LLC. If you have a partner, if you have a partnership, that's a whole nother episode that that we'll do. I don't want to go down two different rabbit holes. During formation of your partnership, you will be very clear in your operating agreement how each person will be paid. And therefore, you need to refer back to your operating agreement to determine how to pay yourselves. So this episode specifically, what we're going to walk through is as a single member LLC. So for our listeners who are a sole proprietor or an LLC, how do they actually pay themselves? So I think there's a lot of confusion, especially for new business owners. Do I need a payroll system? Do I write myself a check? Do I make a transfer? Like, how do I logistically, Kelsey, get the money from my business checking account to my personal checking account? Like, what do the logistics look like?
Whichever method you move forward with, it's going to be considered an owner's draw. So it's not going to be through payroll. You don't need any type of payroll system, and you shouldn't be on payroll as an LLC being taxed as a sole proprietor. You should not be on payroll. It will actually hurt you. So all you really need to do is transfer funds. So a simple bank transfer from the business account to your personal account, or you can write yourself a check. You can send yourself money via Venmo, whatever works for you, as long as it's just a simple, we're just getting funds from business to personal, not going through a payroll system or anything like that.
So I've always considered owner's draws as going up to the ATM of your business. You are not paying payroll tax when you take out a draw from your business. So it does not need to go through your payroll system. You are just going into the ATM, like insert your card, ATM of your business checking account to take out the cash. You are not taxed on the draws that are being withdrawn. I can hear our listeners who are saying, well, then why the heck do I have to bother moving money around? Both are my money, right? My business account is my money and my personal account is my money. Why can't I just pay for my mortgage and my groceries out of my business checking account?
Yes, that is what we call piercing the corporate veil. And what it does is it muddies the waters between what is business and what is personal. So let's take it back for a second. An LLC is a legal protection, right? But you need to legally distinguish what is business and what is personal. Otherwise, if somebody sues your business and you have a bunch of personal stuff in there, there is no legal separation between what is business and what is personal. And that then opens the door for them to come after you personally. So this is why we hark so heavily on separating your business from your personal. It's for this legal protection right here, so that the LLC that you have formed can actually uphold in the event that you are sued. So there is a difference from a legal standpoint between personal transactions like paying your mortgage, your groceries, all of that, your babysitter through your business. There's a difference between that and doing a transfer from the business to your personal. Doing the transfers, writing the check, all of that will uphold. Again, refer to the lawyer. In generally speaking, that will uphold as keeping everything separate. But when you start actually having the expenses come through, there's no longer that separation.
And from the business management side of the, right, like there's two sides. There is the tax side, which I appreciate you starting with. There's also the business management side. In order for you to actually understand how your business is, right, the goal of this podcast and the goal of entrepreneurship is to create healthy, sustainable, profitable businesses. We can't withstand the test of time unless we are creating healthy, sustainable, profitable businesses. In order to do that, we have to have clean bookkeeping. And having clean bookkeeping, it allows our bookkeeping, our money team, whoever is handling your QuickBooks, your financials, it allows them to clearly understand what is personal and what is business so that you clearly understand the health of your business. For our clients who we have seen, now I'm saying this and there's no judgment, right? This is a judgment-free zone. I am saying this with out of the kindness of my heart. We do have clients who are using their business account for personal transactions. And it makes it more difficult because we really don't know what is truly for the business and what is truly personal. And those are the same clients who will come to us and say, where's all my cash? You keep telling me that I'm profitable, but I have no money in the bank account. Well, the reason you don't have any money in the bank account is all of the personal expenses and owner's draws that are pulling the cash out of the business.
That's right. And it also leaves a lot more room for error on the bookkeeping side. So you can overstate your income, you can understate your income. It really can mean dollars in your pocket if everything is mixed together, business and personal.
So when I'm taking owner's draws, does it matter how often I'm taking them?
One of the benefits of an LLC is that there is a lot of flexibility, like I said, in how you pay yourself. So no, it does not matter how often, it does not matter how much, as little or as much as the business can afford. Of course, for management purposes, there's a lot more that goes into that. So we'll touch on some strategies on how to calculate how much to pay yourself as an entrepreneur and as a business owner. But from a legal tax standpoint, it absolutely does not matter how much or how often.
Do I need to set aside a specific amount of money for taxes every time I take out a draw?
Like we touched on before, you don't get taxed on owner's draws. So you're still going to just be looking at that net income line when calculating how much to set aside for taxes.
Method of payment we've talked about, timing, how often. Let's talk about how to calculate the owner's draws, because this is part of really our sweet spot here at Kickstart Accounting Inc. is we love to help clients with the management side of their business, right? We have our bookkeeping team who is actually entering all of the transactions within our system. And then step 2 is how do I actually use the numbers to manage my business? This isn't CFO work, but this is actually managing my day-to-day operations. So when we are thinking about how much to pay ourselves, we have 3 different options. We have our percentage of revenue, similar to a profit first method. So for anybody who follows Mike McAllowitz and Profit First, you might pay yourself a percentage of sales. So every month you have sales that come in and you're paying yourself 10, 20, 30, 40% of the sales that are coming in the door. You are paying yourself back out in owner's draws. The second option is a profit distribution, fancy way of saying that you are looking at your financial statements at the end of each month, and you are pulling the profit of your business out in owner's draw. So revenue minus all of your operating expenses and cost of goods sold. You are pulling out the profit of your business as an owner's draw. And then the third option, which I don't think is as popular, is your personal budget. How much do you personally need in order for your family to survive and thrive? And setting up a system to pay yourself on a weekly, biweekly, monthly basis so that you're able to support your family in the best way.
That's right. And you can use this method or any of these methods really to figure out how often you want to pay yourself, the timing of how you pay yourself, things like that. So if on a personal level, you need funds transferred over every single week, then you can use that to structure your pay from the business to be on a weekly basis. But if you're using something like Profit First, theirs is on a, I believe, either biweekly or monthly basis. So that will dictate how often you pay yourself from then.
I think to me, what's most important is that you choose a method and you are consistent over time. When we create consistency in our business, we were able to start to structure our operating expenses. We're able to structure the way that we do business by having that continuity, right? So we know personally how to structure our credit card payments, our mortgage, make plans as a family by having that continuity, that consistency. So if you are going to use any of these 3 methods, I want you to choose it and then choose the time interval and then practice. Like I want you to practice for 6 months to a year. Don't change it at once every month. Don't change it every 3 months. Really put that into place and watch the results of that over 6 months to a year so that you can start to plan around that and get the benefits of that consistency.
One of the joys of business ownership is that at some point your business will be able to consistently pay you. So, we have a lot of clients that still continue to pay themselves based on the clients that they see or the number of hours worked, whatever it may be. But this is where I challenge you to think of yourself as a business owner and calculate your pay on something higher level than that.
Yeah, you are no longer just a practitioner. You are a practitioner and CEO in your business, and we need to pay you accordingly. Now, as an S-Corp, you would calculate your reasonable compensation and pay yourself through payroll as part of the reasonable compensation calculation. As an LLC taking owner's draws, we don't have that same regulation and requirement. However, from the 9 years of experience here at Kickstart Accounting Inc. and my corporate years, we are able to have the benefits of operating consistently over time that you are going to be able to slowly increase. Like, this isn't a marketing scheme or theme, right? Like, this isn't get rich quick. This isn't the next new thing. These are all tried and true systems and concepts that we talk about on this show, right? Like, this is concepts that we've seen work in corporate for a long time. They're things that we've seen work with other small business owners over time. And so we want to give you those same strategies. So by choosing one of these three methods and then applying it consistently over time, you are going to reap those same benefits that we've seen so many small business owners be able to reap over the years.
That's right. And when you touch on strategies, I could hear the clients telling me, but what about in my slow months? We have strategies for that. We have a full episode on how to deal with seasonality in your business so that you are still able to pay yourself on a regular, consistent basis, like we're saying here today.
And obviously, I want to give the caveat that if you are having a slow season or a long-term slowdown in your business, we obviously don't want you to take out money and jeopardizing the health of your business. We need to be able to pay the people who are working for you, and we want to support you in you hitting your goals and your intentions for the year. So never take out funds that you don't have, that you need to be able to sustain your business. However, I still encourage every single person who's listening to choose one of those methods and have a conversation with your money team on how you can apply this in your business today.
There's a story that Danielle talks about often, and it's kind of a funny one. So what do you think about sharing it here?
I do have a story about Cameron that just recently happened that I think a lot of business owners can relate to. So I had mentioned that we were saving up for something around the house and that I needed to be able to wait for, the wording I used was that we were going to wait for year-end bonuses or something like that. And Cameron's 14 and he is like very matter of fact and very clear about things. He goes, I don't understand the problem, Mom. Why are we waiting? And I said, because that's what we do. We wait and we save, we work up for it. And I run this business like I'm the CFO for the companies that I ran in the past. So nothing's changed for me. Just like I was the CFO for the mid-sized businesses before, I'm doing that same strategies and implementation in this business today. And so those are all the same strategies that I am sharing with you all. And so I had to explain to him that Kickstart is not my personal ATM. I am not going up to the personal ATM just because we had something that was going on personally at our house this month, and that I could not go up to the personal ATM and just pull out funds, and that I treat this business like the business, because not only am I a practitioner, but I am the CEO of this business and I have a responsibility to the business and to the people who work here. And I don't think that Cameron actually walked away from the conversation satisfied. He did not appreciate my answer. However, I wanted to share that story with all of you because it can be really easy to treat your business like an ATM. When your kids want something, when you want something, when your family needs something, it can be really easy to go up to the ATM of your business. And I encourage all of you to press pause and think about what your business needs. What's the goals of your business? What do your team members need? And how can you structure the way you pay yourself and the way your business so that you are responsible for yourself and those around you?
It's an awesome one. I definitely think we can all relate to that at one point or another.
Yes, absolutely. Well, if you enjoyed today's episode, Kelsey and I asked for one thing in return. If you could please go and like and subscribe, share this episode with one other business owner who you know is struggling with their money mindset or has all of these questions, because none of us know it all. We are all looking for help and support. If you have more questions and you want us to go through the specific strategies with you, if you are not sure which strategy is right for you, I suggest you go to kickstartaccountinginc.com and book a call. You'll speak to Kelsey, Aubrey, or myself, and we are there to help you pick which method is right for you and implement those strategies in your business. Kelsey, thank you so much for being here.
Thank you. See everybody next time.